On 1st September 2026, Tim Cook will be stepping down as the CEO of Apple, closing a 15-year chapter that most people think they understand, but they actually don't. Because if you look closely, Cook didn't just grow Apple, he changed what Apple fundamentally is. When Cook took over from Steve Jobs in 2011, Apple was already a giant, doing about $108 billion in revenue with roughly $26 billion in profit. The company was valued at around $350 billion back then. Today, Apple is a $4 trillion company with over $416 billion in revenue and more than $110 billion in profit. Its installed base has crossed 2.5 billion active devices globally from close to 300 million in 2011. Now, those numbers are impressive, but they don't tell you the real story. Because Cook's biggest achievement wasn't building another iPhone moment, it was building what we call the operator's empire. Instead of chasing unpredictable innovation cycles, Cook focused on something far less glamorous but far more scalable. Operational discipline, that too at a global level. Over 15 years, Apple didn't just grow bigger, it became more consistent, more predictable, and far more efficient than any of the companies in the tech history. Apple didn't just grow under Tim Cook, it returned over $800 billion to its shareholders, which is more than the GDP of many countries, turning itself into one of the most powerful capital return machines in history. But this is where the shift begins. Because while most people still think of Apple as a product company, Cook turned it into something very different. Let's call this the ecosystem profit machine. In 2011, Apple made money primarily when you bought a device, accounting for over 95% of the revenue. Today, it continues to make money long after that purchase. Services revenue alone has crossed over $100 billion annually. And more importantly, services operate at margins of over 70% compared to mid-30s for hardware. And now, it contributes to over 25% of the overall revenue. What that means is simple but powerful. Apple no longer just sells products, it monetizes its installed base. Every iPhone sold today is not just one-time transaction. It is an entry point into a long-term relationship through subscriptions, payments, storage, and apps. And that is why the installed base crossing 2.5 billion devices matters so much. Because it turns Apple into a recurring revenue engine rather than a cyclical hardware company. And once you see it this way, you realize something very important. Cook didn't make Apple more exciting, he made it more durable. Now, to be fair, Apple did expand into new categories under this leadership. The Apple Watch, AirPods, Apple Pay, Apple Music, and even Apple Vision Pro all came during this period. Wearables alone have grown into a multi-billion-dollar business segment. But here's the nuance most people miss. These products were not random innovations. Rather, they were extensions of the ecosystem. AirPods make iPhone stickier. The watch integrates deeply into health and daily routines. Apple Pay embeds itself into transactions. Each new product strengthens the ecosystem rather than replacing it. Which brings us to the trade-off. Because the same strategy that made Apple incredibly strong also made it tightly interconnected. Let's call this the post-iPhone dependence. Even today, the iPhone contributes roughly half of Apple's total revenue. So while Apple looks diversified across products and services, a large part of its economic engine still depends on one single device. That creates a subtle but an important shift. Growth is no longer just about selling to new users. It increasingly depends on upgrading cycles within the existing base. And that makes future growth even harder, because it requires convincing existing users to keep upgrading rather than expanding into new markets. Now, add another layer to this story. Geopolitics. For years, Apple relied heavily on China for manufacturing. But in recent years, it has started shifting production towards India and other regions to reduce dependency. This shift is not just operational, it's strategic. It's about reducing concentration risk, protecting margins, and preparing for far more fragmented global economy. Cook's ability to manage this transition without disrupting Apple's efficiency is one of the most underappreciated parts of his legacy. But even this sets up the new challenge, because the world Apple operates in today is very different from the one it used to operate in 2011. And that brings us to the final transition. On 1st September 2026, John Ternus takes over as the CEO. He's inheriting a company that's just not large but structurally strong, deeply integrated, and incredibly profitable. But that strength also creates pressure because now the question is no longer about scaling Apple, it's about reinventing it again. The next phase for Apple is not just about better iPhones or incremental upgrades. It is about defining its role in the next computing cycle, whether that is artificial intelligence, spatial computing, or something we don't really understand yet. And here, Apple is not clearly leading in the same way it used to do during the smartphone revolution, which creates some kind of tension. Cook built the perfect machine for the last era, one that is efficient, profitable, and incredibly resilient. But the next CEO has to prove that this machine can still adapt to a world that demands faster innovation and new categories. That is a very different challenge because optimization and reinvention rarely happen at the same time. So when you look at Tim Cook's legacy, it depends on how you define his greatness. If you define it as breakthrough innovation, you might say he didn't match Steve Jobs. But if you define it as building one of the most durable, scalable, and profitable business systems in the world, then his impact is almost unmatched. He didn't just grow Apple, he turned it into an ecosystem that compounds. And now the real question begins. Can that ecosystem still produce the next big leap, or has it become too optimized to change? Where will the new CEO take this $4 trillion company next? Let me know what you think in the comments below and follow us for more such global investing insights.